into the Coca-Cola company. All right. So the Coca-Cola company, KO. I have 6 shares of the company right now. I'm down 5%, $17.86. My average share price is $58.17. It's sitting at 55.24. It's in the non-alcoholic beverage space, headquarters Atlanta, Georgia. I told you, I just finished reading its book about its history. The dividend yield is 3.40%. This is a different company than gold. This is a stalwart. I believe in it. And so even though it has a lesser dividend at 3%, which is normal on average, I believe in it. And I think locked in eventually gets bought out by them. I think it saves the company. The PE ratio is 22.46. So it's really in line with the S&P 500 average for PE ratio. So it's fair value right now, and it's been on a decline. Locked in saves the KO stock 333 reverse ordinal. And also, I should add that Coca-Cola is in its 137th year of business. 137 is the 33rd prime. So I think this really is a transitional year for the company. Can it make it another 100 years? If it buys locked in its products, I think it can. Remember, they recently bought the body armor fully this year. They finally put those on the books. And for Gematria wise, the body armor buyout failure is a long-term buy opportunity for KO stock investor. 333 English reduction. And so this is what I'm seeing. We're in a bear market right now. It's going down in price, right? I'm buying shares. I've been buying in the 55 range. My first couple shares were in the 60, but I'm buying in the anything below $60. If it gets into the 40s, I'm still buying. KO will be an Age of Aquarius cigar butt. 331 English ordinal, 133 reduction. Now, cigar butt is how Warren Buffett initially made his money in the stock market, buying companies that are technically on their last leg, but if some type of catalyst could happen, they could jump up in price for a little while and you can make a good amount of money. Now, I'm not saying Coca-Cola is there yet. It's still a stalwart, but that could change if they don't figure things out. But I still think there's value there. Now, fundamentals of Coca-Cola, I really went down into it because you can't necessarily look at the assets on hand. You have to look at their sales. It's a beverage company, so their value isn't in their assets. Their value is in their sales, their marketing, their influence, and all that. But we still look at their net equity. Assets on the books, 97 billion, 97.5 billion. Their total liabilities, they have 69.74. The net equity is 27.82 billion. So with the shares outstanding, that's 4.32 billion. So that comes out to be a fair value of $6.44. Again, realize, guys, they just sell water, so it's not their assets aren't into like a lot of supplies, infrastructure, and whatnot. Now, if you look at their long-term debt, that's it's 34.176 billion, and so you take their current liabilities, or their total. You take their total liabilities minus their long-term liabilities, which leaves the current. That's 35.57 billion. And so when you take that right here, 97.57 billion, you got 35.57 billion. That's 62 billion in net equity, which is a big difference. And so the equity fair value without the long-term debt, and the reason why I take off the long-term debt is because they don't have to pay that within the current year. And so it's kind of like you could just kick the can down the road. You don't have to worry about right now. So their fair value comes out to be $14. Yeah. So their net equity fair value, forget that B, comes to $14.35. So it literally almost it does over double when we take their with their net equity fair value price nearly doubles when you take off the long-term debt. Again, don't mind that that B. Now, when you look at their intangible assets, their goodwill, their influence over the public, their 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 image, that's called intangible assets, right? So the Coca-Cola trademark, goodwill, and intangible assets for the quarter ending September 29th, 2023 was almost $33 billion, 32.8. So that's worth $7.61 alone. Think about that. That's a third that's a third of their assets, really. They're at almost 100 billion in assets. $33 billion worth is intangible, but they've been around for so long. And so if you look at the gematria, look, 137 years of operation, 33% of KO stock assets are intangible at about 333 billion dollars. 333 English reduction. 130 years of operation, 33% of KO stock assets are intangible at about 33 billion dollars. 333 English reduction. Marketing magic drives the KO stock, 137 English reduction, 33rd prime. Coca-Cola value isn't asset driven, and bet on KO in all areas of stock market, 333 English ordinal and 114 reduction. Goodwill helps the Coca-Cola company, 330 English ordinal, 141 reduction. The beverage company comparison, price to sales, EV sales. And obviously, one of the biggest companies I'm invested in is LTNC locked in, and it's a hydrogen water company. So I want to look at the landscape and competitors for Coke, Monster, Pepsi, Celsius, Dr. Pepper, Keurig. And so these are the price to sales and the enterprise value sales for each. So we have Coca-Cola, KO. Their price to sales is 5.23. That's not too bad. Their market capper, so that's not bad. Then their enterprise value to sales is 5.79. You have Monster, and you have to understand for smaller companies like Monster and Celsius, their price to sales are going to be higher because their sales aren't that big yet, and they have higher prices. They're overvalued. Okay, so for Monster, their price to sales is 7.92, and their enterprise value for sales is 7.33. So you see it's a little bit higher than Coca-Cola's. Coca-Cola has higher sales. It's closer to its market capitalization. Monster, it's more overvalued. Then you have Pepsi, which is more fairly valued at 2.49, and its EV for sales is 2.86. So say if you compare Coca-Cola and Pepsi in this case, you say, oh, well, if you use price to sales, EV to sales as a valuator, uh, Pepsi is a better value than Coca-Cola. You could say that, or you could say, Coca-Cola is a little bit more overvalued because people like it more, and stuff. Then you have Celsius, so they have a price to sales of 12.3, and then you have the EV sales of 12.6. Again, it's really high because it's a younger company. It's way overvalued. The sales don't match that, right? And then you have Keurig Dr. Pepper, price sales 2.93, and their EV sales is 3.84. So it seems like they might have a little debt on hand. And so when you look at the difference between the big boys, KO, Coke, Pepsi, Keurig Dr. Pepper, to the smaller, younger companies, Monster, Celsius. All right, Monster's a little bit older than Celsius. That's why it has a little bit less price to sales. And so that's just very interesting. And then you see at the bottom, look at the average price to sales for in the beverage production distribution world. It's 8.52. So it's kind of in line, right? If you think about it, 8.5 is kind of in line what we're seeing right here for the big boys right here. You know, you have the outliers of Celsius at 12, almost 13. You have Monster at almost 8. Then you have Pepsi and Dr. Pepper at 2, 3. Then you have Coca-Cola in the middle. So that's kind of in line. That's good to see. Enterprise value sales is a reliable ratio for beverage business comparisons. 3,033 in the Fibonacci. I think that's in a very important decode. It's in the Fibonacci cipher. It's the growth cipher, and I've been using it with money as well. So enterprise value sales is reliable ratio for beverage business comparisons. 3,033 in Fibonacci. I think that's very powerful. And we'll this goes with Coca-Cola as well.